So guys, Lucas here from Stoic Crypto Investing. Today we talk about a really important topic, and it's all about greed and fear. And yeah, that's where Stoic Crypto Investing comes in, because a lot of people just make irrational decisions when they get overwhelmed with emotions. Because especially in crypto, when greed happens, you get into euphoria and all this kind of stuff, and you think, yeah, I can invest in this coin, I will miss out and everything. But as soon as the price drops, then you get into fear and you regret that you bought it and all this kind of stuff. It's really important that you understand that, and today we talk how you can actually avoid that. And for that, I have researched a little bit, and I found this article on how to avoid emotional investing. And here they basically also talk about this greed and fear spiral or index. Yeah, that's really important to understand, because that's basically the ground level that you gotta understand here, because everybody goes through that, and especially in crypto because it's so volatile. So what they actually talk about exactly is the greed and fear index is the reason why people are buying at market tops and sell at market bottoms. And if you know something about crypto, that's something that a lot of people do. Even though crypto went up a lot, not everybody makes money, because they just buy at the top and they sell at the bottom. Like if you look at here, if you go to coin market cap and look at Bitcoin and go all the way through, what they actually mean is that a lot of people, they start to get hyped in this kind of region, then they buy almost at the top, then it goes up, they feel really great, they are like right here, euphoria, they see like, oh, I have made a lot of money in a really short time period, and then everything collapses and goes down and they get fearful and everything, and they decide to sell their investments. And the difference between here and here, that's usually a loss, and that can screw you up if you go with this greed and fear index, because usually you only invest when you are greedy, and then right afterwards comes the fear, and then you sell. And that's what they actually mean here, when they buy the top and sell the bottoms. That's really important to understand. But also comes along with that goes in with the thing that I have talked before, is that when you are greedy and emotional, you are like bad at timing the market. If you don't already know it, you can't really time the market, because if anybody could time the market, then they would be really, really rich, and they would probably not tell you when to buy or sell some stocks, crypto, or whatever it is. So as soon as you start to get into this emotional index, then you probably have a bad timing and buy at the top and sell at the bottom. But what's actually the best strategy to not get screwed over? And that's here at the bottom, and it's called a dollar cost averaging. And I think that's one of a good takeaway of this article is that you should go with the Stoic approach, the rational approach. And dollar cost averaging is basically the best way to do that when you want to stay invested into the market. And it basically means that you invest into a market regularly, every month, every day, at a certain price, and then you always just buy at the same price. It doesn't matter if it goes up or down. And if you just would look at Bitcoin, for example, if that would actually work, like if you cost dollar averaged in, like in, what do we want to say, in 2019, and you do that all the way, we started at like $5,000 worth of a Bitcoin. Then you do that, then you see, oh, it's going up, and you kind of accept it and go with that. Then it goes down, but you don't care, you still invest, and then today you would be here. You would still do the same thing, and you are up like 5 times the value than before. That's the power of cost averaging. And as it indicates, it's also a long-term approach. The only problem with it is that it's really boring. And yeah, then our mind screws us over, and then we are back in this greed and fear index. And yeah, that's what you have to be conscious about, because our mind usually tricks ourselves. And yeah, if you are conscious of that, you can avoid emotional investing. Or if you do it, you only do it with money you want to gamble with, but then it's not investing, then it's gambling. So why are emotions so important to market psychology? What they say right here is, many investors are emotional and reactionary, and fear and greed are heavy hitters in that area. That's definitely true. When it comes to humans and money, fear and greed can be powerful motives. So if you have that under control, like a Warren Buffett or somebody else that is good at investing, then how can I say it? Then you have a huge advantage to the average investor. So I would recommend that you do that. Go the Stoic approach. That was basically it. That was everything that I wanted to share today in the Stoic crypto news, and we will see us in the next videos. Bye guys.